Hey guys, it's Steven. Today I'm going to be going over the Bytes liquidity pool. I'm going to talk about some of the dynamics and how to set up liquidity pools, and also talk about some strategies that you can use to take advantage of the concentrated liquidity. To start off, I from last video, I was about $1,400 in fees. Over the past day, it's gone up to about 2,000, and some of that USD dollar is just because the price of Ethereum has gone up. So I think that's the reason why it's up slightly there. So let's just keep moving on. So the price of Bytes has been pretty steady here. We did have a nice tick up in Bitcoin and Ethereum over the past day, but overall for the Bytes to Ethereum chart, basically sideways. So just to get started, as far as strategy, what are these lines? These lines are pivot points. Simply to create a pivot chart, you calculate the low, the high, and the close. I use a floor trader pivot calculator, and that's where you get basically a daily pivot. So I like to think of the daily pivot as a magnet, something that the price likes to move towards. And then it also calculates the support and resistance. So if you do want to find out exactly how these are calculated, just look at the floor trader uh, calculator on Google, and it'll give you more information as to how those numbers are used. Mainly the pivot charts are used through computer algorithms is what I've found. The reason why they use pivot charts is because instead of using these moving averages that change, like the momentum and stuff like that, it's much more simple for computers to use set numbers throughout the weeks or days, or even shorter time frames. So, and then how do we implement these pivot charts into a strategy? So, um, something that I like to use, I don't necessarily need to use the US dollar charts, although at this moment the US dollar price is relevant because I am basing my position off the US dollar value versus the NFT floor value. So as of right now, it's about $24 worth of bytes to buy an identity floor, and it's about $22 worth of bytes to, well, actually, let me double check that. Yeah, it was 1,100. Yeah, 11,000 divided by 500 bytes. So $22 to purchase a land floor. So if people are going to be purchasing their Neo Tokyo NFTs through the price of bytes, they're going to go through this way versus buying the floor. So it seems that that would be a reason to create demand for the bytes token up to the price of 22. So if we look at that on the Ethereum to Bytes chart, which is more important because that is going to be how you're setting up your liquidity position. Well, I guess we're going to assume that 0.07 is probably going to be about where the price would be, about $22 from here. It could be a little less, a little more. Let's just do the calculations now. So 0.063. If we need the price to be at 22, so we'll divide this by 19.7. Okay, so we'll need this to go up about $11.6 to get to $22. So let's multiply the price of the bytes ratio token here times 0.00633. Yeah, so it's right at 0.07 as I thought. So yeah, so this will be basically the break-even point for people looking to buy. So maybe it might be a good idea now to shuffle around, maybe bring it lower, but right now I'm just going to leave this position where it is now. But in the past, some strategies as far as using this pivot chart, I've used it to trade. So as you can see the week before here, using this pivot chart, it's basically acting as a magnet. So if you use just this simple range here from 0.0126 all the way up to 0.016, you're able to accumulate a significant amount of volume in that range and basically get a good amount of fees. So obviously what happened, we had some bearish momentum into the entire crypto market and Bytes as well. So what ends up happening is as your ranges gets basically go from Ethereum all the way to Bytes, now you're left with a liquidity range that's out of position. So from there, you could also use the supports as a place to put your new position. So assume you have all Bytes now. Well, now you can use these supports as buying supports. So this will be basically buying pressure. So then you'd be able to put in all your Bytes to work here. So you could create a range with all Bytes from here to here. And then as buying pressure comes in, you're able to take advantage of that. So, that's just a simple way to look at what I'm doing here. Obviously, these charts don't predict anything. They're more just to give you a calculation. A simple tweet from Alex Becker could dump the price or spike the price either way. So really what these charts are doing is they're just giving you a good measurement. When you had this spike here, well, once it hit this R1, then R2, R3, well, once you hit the R3, it's giving you a pretty good sell signal. So like I said, it doesn't predict anything, but it gives you some measurements. All right, so quickly, I'm just going to go over what happened over the last day. We're starting to move down some more on the holders. There are more bytes being burnt to accumulate land NFTs. And already showed you my position here. So that's about it. So let's get into something I wanted to talk about, which is just basically how to calculate concentrated liquidity and what's the difference between being in a super tight range and a longer range, and then just kind of compare the negatives and positives of that. Just wanted to point out my position here. As you can see where it says on the bottom, it says bytes locked. It says 1,000 bytes locked there. So about 600 of those are mine. And the reason why I decided to do it all into one bar here is simply just to get more exposure, basically more leverage with my position. So what ends up happening is because I have half of the liquidity bar there, I'm able to get about 60% of the 1,000 bytes locked in there. So it allows me to basically gain as much as I can on my capital. But let's assume that I wanted to spread these 600 bytes, and let's just call it, let's say I keep 200 in the same bar here, put another 200 in this bar here, and another 200 in this bar here. So I'm just going to slightly theoretically increase my position here. So what happens when I do that? Well, now if I were to add about 200 to this position here, I would only have about a third of those of that bar. And the same would be true for here. The bytes locked is about 460 there. So essentially, I'm going to have to share my fees with more people. So basically, that's all that's happening is you're not able to get a bigger piece of the pie because your bytes are being spread out more. And the way I look at it is, let's assume that the price is within the range right here, and it bounces between these three bars here. If we assume that all of the activity happened within all three bars here, let's assume 100% of all the price activity for the day happened within these ranges. Basically, I would be getting 33% of those fees. Now, if I just keep it in just one bar and I'm able to get 1/3 of the volume in this one bar, even throughout this entire movement, I'm able to make just as much, just because I'm getting a larger portion of this right here. So, basically it's just a bet that you're going to be able to get that 1/3 of the time it's going to be within this range here. So let's go ahead and talk about what'll happen if more people start to provide liquidity. So, obviously this is just one person. This is just me right here providing a pretty good amount of liquidity. What if more people they have a bunch of bytes sitting around and they want to start to provide liquidity? So what will happen is if there's not more ETH coming into the market, there's going to be more spikes lower. So as I talked about in previous videos, um, with a very low liquidity, you're going to see some pretty fast spikes because there's not enough Ethereum to pick up that sell pressure. And then so the same would be true is if we provided more bytes as liquidity, what ends up happening is we start creating these sell walls. So as these sell walls start to get possibly bought into, you're going to see a much more stable price of bytes. So there's not going to be as much slippage when people are buying. And ultimately, what ends up happening is the people who are providing these bytes, they could potentially be in a difficult position once the price starts to get bullish. So you have to be pretty careful about how many bytes you put in because basically you're going to be your sell position. Creating a liquidity pool in certain ranges is the same thing as creating buy and sell orders. So assuming that you did create a sell position here, liquidity pool position, um, this would turn from bytes to Ethereum as the price moves through. But I guess a positive thing is if we do start to get some buy volume, those people who were providing this liquidity essentially would become a support wall now instead. So there's positives and benefits, and obviously, the more people in the pool, the less the fees because you're sharing the same amount of volume and fees with more people. So you could possibly see some diminishing returns with people coming in. So I would say the name of the game is to basically look at this chart and find where the least amount of liquidity is, then that way you'd be able to get the most action. So, for example, if we do have some sort of spike lower and we move down to this area here, there's more opportunity in this spot to basically set up a ETH buy liquidity position, stuff like that. So, just wanted to point out that. And just to touch up on the short range liquidity pool, it does increase your impermanent loss. And so let's just go over what impermanent loss is. Impermanent loss is simply the amount of money that you could have made if you just held the asset itself. So if you were in all bytes at this price of 0.0067, and then you decide to provide liquidity all the way up to 0.008. Whatever fees you get minus what would have happened if you just held on to those tokens would be your impermanent loss. So, if you just assume that the price went up 10% and you put in $10,000 worth of liquidity, if you gain a 10% gain in your rewards, as the price moves to the top of the range and the price of bytes would have gone up 10%, your rewards went up 10%. You necessarily don't really have an impermanent loss. So impermanent loss only happens when the price of the asset is moving higher. If the price of the asset is moving lower, that's not calculated in impermanent loss. It's basically you just turning into basically a buy position. So I just wanted to point that out. And obviously, if you were to say expand your range longer, the impermanent loss gets cut in half the longer you go. So the amount of impermanent loss, because you're not offering up as many of your bytes tokens in at the beginning. So that is a way to cut down impermanent loss and still provide liquidity. Just make larger ranges. All right, so let's just get into some more strategy we'll just go ahead and use my position as an example here. It's been about 5 days since I created this position, and so far I've been pretty lucky to be within the range some of the times. But what to do, like how, now that I'm below my liquidity range. I've accumulated a pretty decent amount of fees here, and I've got a pretty good amount of bytes. So I have some options here. I mean, the first option would be to collect these bytes. So your rewards that are sitting in here are basically doing nothing. So something that you probably do want to do is go ahead and collect some of these fees. And that way you're able to have your bytes and you can put them back to work or just have that Ethereum to use. So that is one of the options here. Something I do like to do, especially when I'm not in risk of going back into my range. I basically have a lot of time. So I'm able to basically just kind of set my own price here, and it can fill whenever it feels like filling. So I can just set a low gas cost here and just send it. So I can go ahead and do that. And then another thing is to cut down on impermanent loss. Maybe I want to take out some of these bytes, and that way I don't give those bytes back as the price moves higher. So I could just remove a certain percentage. If I want to just remove 81%, I can do that. So remove 81%. No, I don't want to move. Let's just keep 500 in there. So I'll just remove I'll just move 118 of these tokens. So let's just do that real quick. I guess 117 is the number they're giving me. So go ahead and remove those. And now I've successfully basically, have this buy position that I used my liquidity position for. And I'm going to go ahead and move this down just a little bit. 50 Gwei is already pretty cheap anyway, so I'm sure it'll fill relatively quickly. And yeah, that's it. So that's just another strategy. And now that I've went ahead and took out some nice profit, I could take that $2,000 in ETH, or I can put this ETH back to work. I could basically go back and maybe I want to create a buy position. I want to take at the end of the day, I want to take advantage of the sellers, not necessarily the buyers. I want to use the buyers to my advantage. So I want to find where the buyers are going to come in. And I don't necessarily want to use my bytes to give those to the buyers. I want to give my bytes to the sellers. So the sellers can basically take my Ethereum, and that's basically what I'm trying to do, if that makes sense. So, now that I have some liquidity, maybe I could find some more liquidity and just create like a buy zone here, and maybe try to take advantage of accumulating some cheap bytes. So if there is a scenario where the price goes lower, or maybe even the price of Ethereum keeps going higher and the price of bytes stays the same, that would be the same as this ratio going lower. So that's definitely a possibility too. So just wanted to kind of point out that strategy of taking profits out, and you can even just take profits and put it into USD and put it into your bank account. So you definitely want to take profits. If I've learned anything, then that's what I wasn't able to take enough profits, obviously when the price of bytes was higher, but I did take some. So, and that's something I think everybody could always do better at, is learning when to take profits and securing those gains. So I think I covered a pretty good amount of things that I wanted to talk about. If there's any questions, I'd be happy to go into more detail, and we can definitely talk about this within the comments below or in Discord. So that's all I got, and I'll catch you guys later.